Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Today, we're going to be talking about three reasons why you need to keep your business money separate from your personal money. This is something that really plagues the home business community, okay? To where we've got our side hustles, you've got your, whether you call it a side hustle, whether you call it a business, I don't care what you call it, but you are in a business venture and you have money coming in from your business, but you also have personal money coming in. And we're not keeping those things separate, okay? So I'm going to share with you three reasons why this is super duper important for you. It's so important to get this right. All right, number one is called piercing the corporate veil. In the event that you are sued, all right, I don't care if you have an LLC, S Corp, partnership, C Corp. In the event that you are sued, if you are commingling funds, if you are, if you're paying for your mortgage out of your business account, if you're paying for any personal expenses out of your business account, then the lawyers essentially make the case and said, hey, this person and the business are one. So we're not just going after business assets. We're going to attach personal assets as well. So this is why I tell you it's bookkeeping over business structure, because it's the bookkeeping and how you manage your money that's going to save you in the event of a lawsuit. So if you've got all this money mushed together and you can't tell what's a business expense versus a personal expense, then you are essentially shooting yourself in the foot. Okay. Is having these business structures, the liability protection that they offer, it goes completely out the window if you don't have this money right. I cannot stress this enough. So basically what happens is if somebody sues you, instead of them being able to get, your computer or whatever, they now can have access to your house and all of your other, if you have more than one business venture, they get access to all of that stuff if they sue you. All right. So it's super duper important that you start to separate this money. Okay. And not just be paying for stuff all willy nilly. Right. This is something that I don't know if it's taught very well or the importance is taught very well, but it really is key in you being able to separate those funds that separates you from your business in order to protect you in the event of a lawsuit. All right. Number two, mistakes in deductions. Ooh, I am dealing with this right now with a client, okay? Because what's happened is because he's got all of this money just mingled together, okay, we went and paid cash for a car. Okay, well, no, that's not tax deductible because your business didn't buy the car, you bought the car. So it is not a tax deductible expense. But because he just don't know and just went and spent money all willy-nilly, well, sorry. But you're going to wind up claiming deductions that you shouldn't claim or missing deductions that you can claim because you've got money just coming out of everywhere, right? You got money on this personal credit card, stuff coming off of this personal credit card. You're spending money out of this bank account. You got that bank account. Just got money just being spent over everywhere. And you really have no control of what you're spending, where you're spending it from. So when it comes down to preparing your taxes, you're sitting here saying, okay, well, I have these deductions and no, right? When you look at it from a bookkeeping standpoint and you start asking the questions, and this is what is our job as tax professionals is to ask the questions, to question these expenses. Because as tax professionals, if we just allow you to go deduct stuff all willy nilly, then we are incompetent and we can get fined and held responsible as well. So this is why we ask the tough questions. It's not that we're all up in your business, but we have to be up in your business to make sure that you don't go claiming deductions that you shouldn't have. Because if you get audited, then the first thing you're going to do is say, my tax professional, my CPA did XYZ, and you try to throw us under the bus. I am not trying to be Rick Gates, trying to defend anything. Absolutely not. So we have to ask those tough questions because that is our professional responsibility. And also to let you know, like, hey, this is not tax deductible. Don't do it again, period. Okay. So if you've got stuff coming out everywhere. How do you know what you paid? Because you're not keeping up with your bookkeeping. Because if that was the case, this wouldn't even be an issue, right? But if you just got stuff being paid for all willy-nilly, just everywhere, like I said, just random credit cards, you just pick a card and just go swipe it because there's money there. Absolutely not. You have to really, hone in on, paying for your business expenses out of your business account and paying for your personal stuff out of your personal account. Okay. It's just that simple. All right. Number 3 is for building business credit. So when we're first getting started in business, when people are talking about money for your business, then you're looking at your personal credit. Okay. And your personal credit is attached to to secure these business loans. This is not what you want in your life. Because if something happens with the business, then your personal assets are then at stake. You don't want that in your life. So when you're talking about being able to secure working capital for your business, you have to have business credit in order to do that. If you just have your stuff all mushed together, then there's no way for you to really build business credit because you got your personal money and your business money just all mushed together. And so you're still going to be having to secure a loan with your personal assets. And this, again, I can't tell you, this is just not what you want to do. And I'll give you an example. There is one of the tax franchises that really push, like if you want to start one of their tax franchises, they really push for you to secure your financing with your home and with your personal assets. And I'm saying, no, that's just no. That doesn't make sense. Right? It makes sense when you're like, okay, well, I'm trying to do this. I'm trying to get this business started. And, and I just use it as an example. But the point is that if you start a business and you secured that loan, if you get a business loan and you secured it with that residence and that business fails, then not only did the business fail, but your house is about to fail. Right? Your investments and all that stuff is about to fail right along with it to cover the costs of this loan. So if you can start to separate this money and then to start to build business credit, then you can secure business credit with your business and not with your personal assets. Okay. That is the whole reason behind having these business structures so that you can have that separation of personal and business. But if you don't get the money right, then, it goes out the window anyway. If you have a business loan and you're still commingling funds and something happens and this is what I'm talking about, the lawsuit, somebody sues you for the money that you owe and they go back and look at your records or the lack thereof and they say, oh, well, you spent our money to pay your mortgage. So we'll take this house, please, and thank you. You took this money to go buy a car. We'll take that too, please and thank you. Okay. So you have got to train yourself now. Like a lot of people like, well, I'm not making that much money. I don't care. I really don't care how much money you are making versus not. You have to train yourself to separate this money. If you do it when you have a little bit of money, when you have a larger amount of money, this will not be an issue. So do it now in the beginning. And listen, if you've been in business for a while and you're like, listen, I've been doing this and I've been just fine. Okay, listen, when you campaign for an audit and get elected, you will understand why it's not fine. Okay. I hear people all the time quoting the odds of, it's only a 1 in so-and-so chance of getting audited. That's cute until it's your turn for bingo. Okay. And then you have to defend yourself. And if you can't defend yourself, you're going to lose, period. Because the IRS doesn't come for you unless they're pretty darn sure you've screwed something up. So they don't just go waste time, with when they bring cases or investigate you for fraud or audit you for something. They don't do that for nothing. They have a pretty good idea that you have screwed something up. So this is why it's important to get these things, these foundational things right, so that you can build. And when you do grow, you don't have to go through this pain later on. You invest in the bookkeeping now. You learn how to manage by separating this money. You learn how to set aside money for taxes. You learn how to budget your money. Okay. And these are all the things that I talk about in my new ebook that talks about this stuff. Okay, just the foundational things that, if, like I said, if you've been in business for a while and you realize that you're listening to this video and you're saying, you know what, I don't have this in place. This is why you get the book, to get it fixed now instead of getting it fixed when you get the letters from the IRS. Because once you start getting letters, let me tell you something. When you get letters and then you take that to a tax professional or attorney or a CPA, your price just went up exponentially. Okay. The minimum I have seen for tax representation is a $2,500 retainer, when you could have spent $200 or $300 for a consult and figured this out, or a couple bucks for a book and figured this out. Okay. So when you look at, that's what I said, a minimum of $2,500, I've seen as much as a $4,000 or $5,000 retainer. That's just for them to even look at your stuff. That is not even fixing anything yet. So understand, when you don't get it right in the beginning, it's going to cost you more on the end. All right. So listen, thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.